Okay, and we're live. Welcome back to another session of the weekly crypto update. Luke, you there?
Yeah, I'm here.
Awesome.
I can't work out how to do this thing. We'll have to talk about it next time.
Happy Independence Day, Luke. Do you celebrate that?
What the hell? Happy Independence Day. What?
It's July 4th.
Dude, I'm in Australia, not America.
So at least we should greet any of our US viewers out there. We do actually stream this out to a US channel. So in case anyone...
Not quite the right time of day, though, right? Like, it's what time to be in the States? It'll be -11, so it's 8 p.m. here. I'd be in the middle of that. It'd be in the morning there, I think.
Yeah. So the early risers, they're already going to be tuned in.
Mm.
And it is. It's Independence Day has already started for a few people.
Yeah, it is an interesting one. It's an interesting one, but no, it's not my thing. And I'm going to be interesting to see. Interesting to see what happens tonight with in the States. How much they allow people to celebrate, and then what the outcome of the celebration will be.
Right. So actually, just before we logged in, actually, I was looking up online to see like how people are going to celebrate Independence Day this year, and actually there are articles out there kind of helping people find alternative ways to celebrate Independence Day at home. And it was suggesting that people should throw barbecues in the backyard, buy streamers, buy.
Look, I think that's. In all honesty, I think that, and the same is here when we have Australia Day, which is the same thing. I mean, it's probably got a bit probably in the same way as I guess Independence Day probably doesn't have as much political controversy as, say, Australia Day. As Australia Day is, it's sort of seen as being also a bit of a racial issue. We've got change the date things, all this kind of stuff here, and I don't have opinion one way or the other about it. But it's I think that this year we did not have any, like they pretty much didn't have any of the major. That was Anzac Day. Anzac Day, which is a very, very big day here, which is like a, World War I, World War II, or pretty much all serving military parade thing, and they binned it this year because obviously it was right in the middle of the current pandemic. But I think that for Australia Day and a lot of the other major celebrations that we have here, I mean, most people, would be doing just that. Like, it'd be a home event, and I think that not many people end up going out. More people go out than they would usually be out. But I think that most people do the same thing. Most people celebrate at home, have a barbecue, catch up with friends, family. Go to a cricket. I remember there's a few years where we used to go out and play cricket. It was the only time of the year we used to play it. And I think that's what most people would do. However, I think that at the moment it's one of those things where people. And this is a common human condition in that we really want to do things that we know we can't do. Like, everyone wants what they can't have. It's the fact that it's either difficult or impossible to attain makes it even more desirable. So I think that it would cause more tension because it's one of those things that people maybe on any other given year might not care too much about, but because it's something that they no longer have access to, then immediately they want it. And I think that's what we're all. I think that is going to play a bigger and bigger role in people's psyche over the coming months. Anyway,
I think so. I completely agree there. All right, for those that are joining in for the first time, welcome to the live stream, which we conduct every 6 p.m. here in Manila time, and we talk about weekly crypto updates, so anything that's kind of big in the crypto space, and then also anything that's kind of like prominence in the news from fintech in Southeast Asia. So usually the way we kick it off is I pull up a couple of slides, so usually 3 slides. We go through those together, and then Luke shares some market updates using his screen. So Luke, I'm gonna bring up my screen.
Yeah, go for it.
Let me know if you can see it. Is that coming up?
Yep.
Awesome. All right. Also, don't know if I should be celebrating 4th of July because by nationality I'm British. So apparently Independence Day dates back to the 18th century when they kicked out
the British. Exactly, mate. This is your defeat day. We lost the colony.
But no hard feelings. That was the 18th century. Okay. All right. So moving on. So the first of my 3 slides, and Luke, I'll keep inviting you to comment on this. But this is I found this pretty interesting. So this is something that I saw that was announced this week, and it's basically the Overseas Filipino Bank, which is one of the banks that's owned by the Philippine government, actually launched their own mobile app catering to basically 3 different types of audiences. So mainly OFWs, so overseas foreign workers, so like Filipinos based abroad. And then you have overseas Filipinos, so those that are Filipino that are actually living overseas. And then you have beneficiaries, which is basically those that are here locally in the Philippines, right? And so, yeah, so this mobile app has been spearheaded by Land Bank, which is the universal bank owned by the Philippine government, and it predominantly serves farmers and fishermen. It's also jointly launched by the Department of Finance. I've got that in the slides. So I thought that's pretty interesting. And the major development here is actually that they are integrating so digital onboarding and AI basically and what that actually means is they've automated like the KYC process for using selfies. Is that anything new for you, Luke?
This kind of stuff. I guess we'll just see what happens when it's actually, in operation. Like as in when it's launching something and then it actually being available to, is this available to consumers yet?
So I had a look at their website, but their website was down. So
until it's actually live and being operated. And the other big thing as well is that it might be in operation, but it depends on whether or not people use it. So something like this is very important. This is one of, when I first got into crypto, and then I think the first cryptocurrency, this is about a year after I got into crypto. The first major conference I went to was in Dubai, and the main problem that everyone in Dubai, and there were many projects trying to do it, was trying to solve this problem of, overseas workers, as Dubai is, 90, the Emirates, UAE, and a great proportion of the Middle East is compromised mostly of overseas workers. In Dubai, it's something like 80 or 90%, 85%, something like that. And that's fairly consistent across the whole country. Mm-hmm. So you've got a lot of people who are earning money, and this is from, countries predominantly, Philippines, Indonesia, Malaysia, Southeast Asia in general, mostly Filipinos. And then you've also got Indians, Bangladeshis, Sri Lankans, people from that part of the world. And they will do, the vast majority of jobs over there. So obviously there's a major issue where a lot of people are working in Dubai because there's a lot more money to be earned, and they will basically earn their money and then send it back to their home country. So a lot of people are using services like, Western Union or MoneyGram, all these different services, and the fees they're being charged in some cases due to the low volume of some of the transactions, because people are sending money back every week for whatever reason, would be sometimes upwards of 20% of what they were sending.
My gosh.
So yeah, it was quite consistently, and that's mostly due to administration fees being slapped on. So if you're going to send $100 and there's an administration fee, a flat fee of $5, you've already lost 5% like that before any other fees. Whereas if you're sending $1,000, $5 doesn't really, make as big a dent. However, if you're doing, a $100 transaction every week or something, then, because you might have family back home who need that money every week. So there's so people are looking at solutions that will allow people to use crypto, to use Bitcoin, where there'd be a Bitcoin usage, So you'd be putting your money in, they'd be converting to Bitcoins into Philippines, liquidating it and converting to cash. The whole process was designed to be seamless for the user. So the user wouldn't actually be controlling the crypto. It was just being done by the organization. The back end was being handled by crypto. So good idea, but the issue is onboarding users. And this is where I get to this, is that the biggest issue is that human beings are creatures of habit, and any new technology, the biggest issue it has is obviously gaining mass market, gaining adoption, getting people to get on board. And despite the fact that people were, being offered a product that was better, faster, cheaper, all those nice things, they were still not willing to shift. And there's a few reasons behind that. Like number one is people, probably one of the most emotional things other than family and things like that and loved ones, people get really emotional about their money. And that means that the threshold of trust you need to be able to trust a new organization or a new technology with your money is excessively high. So that's a major barrier to any new technology or any new platform. Now, if this is being run by a local Filipino bank that would be known, trusted, or whatever, they might not have such a big issue. But breaking that habit that people have of the Filipino workers who've been over there for 2, 3, 4, 5, 10 years,
right.
They're going to obviously struggle to break that habit. And then also getting that, you really know, it's really going to be a bit of the marketing effort is going to have to be huge to get people to use it. That's the only thing I have to say about it. But it's a great idea.
Yeah, I completely agree. And definitely having the stamp from the Filipino government is definitely going to help here. If people see it as basically, a banking initiative or banking app, which is actually backed by the government itself, that should provide more credibility. For those that might have contrarian views, send us some comments so that we can reply back as well.
I'm going to give only one contrarian view on that, and that is that when we talk about trust, I'd probably say of governments, Filipinos don't necessarily have the biggest trust of their government. From my experience of traveling in the Philippines and working there, I think that the trust of the government, I think the first question that would be raised in people's heads, I'm not saying this is the fact, but I think that the first question that would be raised in people's heads is, who's getting paid to make this happen. Now, I'd probably say from personal experience nowadays, I don't think that the situation is as bad as it maybe has been historically. I've dealt with a number of agencies in the Philippines for my business, and I have not. It has been completely at arm's length and completely professional. I've in my dealings working with governments and senior sort of people in the Philippines, the entire interaction from start to finish has always been professional, and I've never been in a situation that would compromise my integrity. And I think that is more the case now than it would have been in the past, perhaps. I mean, maybe it could just be me, but my experience has been that they're quite above board. So I have no doubts that this is above board. I'll just put that out there, that I think that this is, if it is a legitimate offering, it's a legitimate offering. However, my only concern with the success of this program is that trust factor from the end user. Will the end user be like, oh yeah, I'll do this? Because I think that in a lot of cases, someone would trust, a 100-year-old American business like Western Union, despite the fees, over something that they're unfamiliar with.
Well, we have Filipino viewers in on the show today. So I mean, like, if anyone has any comments on that, feel free to.
Yeah, of course. I would love to hear it. I would actually be really interested to see what people have to say.
There's something so in addition to what we talked about this app, something that may not, for the international audience that's kind of tuning in on this, right? Something that's kind of interesting here is that I noted on the slides is that there's no minimum initial deposit, right? And then there's no average daily balance. And I think that's something that's actually basically prohibitive from regular banking accounts today in the Philippines. So I think it might be something that's quite prevalent here, which is that sometimes the initial deposits can be too high, that stop people from kind of even considering to open up an account. And then having basically a minimum balance every day just to be able to maintain the account. So I mean, I've been told in the past, like if your balance is at zero, the bank will just automatically shut it down, right? And that's so that's going to be a good positive factor basically for the local audience here. Another one is that basically, I mean, why are these apps so important? Because like you said, the remittance industry is so huge here, especially for Filipinos who probably have one of the largest diasporas like overseas. Right?
Yeah, it's 15% of the country's GDP, which is massive.
Yeah, it's absolutely huge. And the thing is that there's two opportunities that people see here generally, right? And it's basically the amount of like mobile penetration, the tech savviness of like the local people is so you've got around 58% mobile penetration. What that actually means is that those who actually do have mobiles, sometimes they have more than one, but obviously some people in rural areas, they don't have necessarily connectivity yet, right? But the mobile penetration is very high in the country, but yet the number of actual financial transactions that are being performed on these mobile phones is actually still very low, right? And actually, overall, not just on mobiles, but actually just online, only around 4% of financial transactions are actually online. So it's still greatly it's unexplored. It basically hasn't been tapped yet. And so that's where everyone sees the opportunity here for fintech.
Oh, okay, yeah. We just got a question in, by the way.
Gotcha.
Doesn't Union Bank provide no maintaining balance with with their existing digital account already?
It's very likely. I'm not saying that these guys are the only ones not providing no minimum maintaining balance, but I'm just saying it's one of the selling points. So especially for the international audience like tuning in, they won't see why it's so important to have no maintaining balance. But this is just kind of one of the features that will be a key sell for the locals here. Are there any other questions? I actually can't see the questions. So
I can see them. Just let's keep rolling.
Okay. All right. Well, I was actually going to move on to the next slide, unless Luke.
No, go for it.
Yeah. Okay.
No.
So something that I noticed basically in the last week or two, and I really wanted to highlight this, and this is something that I guess we all, myself, Luke, Bitcoin Malaysia, Jason, we will spend a lot of time in this space, basically educating people, trying to avoid scams. And it's just something that's been highlighted twice in the last week. And I thought it's a good moment basically to bring this up. Now, the two that I've put here on the slides. So one actually you can see, so I actually received it on June 30. This is a guy trying to join the BlockchainSpace community group. And he was trying to post on the community post. Obviously, he hasn't been approved. And he's saying he swears Bitcoin mining is real in this channel. I was invited to join a man, from London. Here's the link. Join this group. I gave it a trial. Now I'm earning with ease, monitoring my trade and so on. Right. And then there was another one that I was made aware of since our last webinar last week. And that's a company called Hydra Mining. And so apparently this Hydra Mining company, they claim to be a Bitcoin mining company based in Australia. Are you hearing any of these Hydra Mining?
I'll Google it, yeah.
No, I Googled it last week and nothing comes up. And so I'm just wondering if Bitcoin mining in particular in Australia is actually...
I would never mind Bitcoin in Australia because it would be the most expensive. We've got one of the most expensive electricity prices in the world. We're ridiculously high mining here. If any company sort of came out and said we're mining anything in Australia other than raw minerals like coal, gold, and uranium, I'd just say you're wasting your time. Bitcoin, digital currency mining in Australia is not profitable, purely due to the fact that our electricity is one of the highest in the world.
So there you have it. I mean, that's already really good to know. You know, the fact that they even say they're running a mining operation out of Australia and that they're profitable.
A lot of companies do that. I was privy to. I was invited to a group, and I immediately knew it was a scam. It was called Liberty Sky. Liberty Sky is a scam. I don't care what anyone says. I'm not sure if they're still operating, but they basically would promise people 10% commission if you brought someone in and then they put Bitcoin into the business. Then they said they were based in Australia, and I was in Sydney actually, and they did a whole bunch of things that were like complete, they were ridiculous. They were offering like 15% returns, 15% returns per, what was it, like 15% returns after 7 days or 2 weeks or something. So ridiculously high. Ridiculously high. I think it was 2 to 3% a day. 2% if you gave less than $1,000, and 3% daily returns for 15 days. That was it. 2 or 3% for 15 days, and then you would, and then that's how much you would earn. And then I asked, well, how do you make that kind of money? I was in the Telegram group. How do you make that kind of money? And then no one could answer the question, because obviously, if you're an investment scheme, generally it would involve trading or mining, or there'll be some kind of way that they're being able to earn that kind of yield, make a profit, and then still make distributions back to investors, especially over such a short time frame. But it was all wish-wash, really, really lots of buzzwords, and they had no idea what they're talking about. And then they said they're an Australian company, so then I asked them for their AFSL, which is the Australian Financial Services License, because you need to have that in order to, basically you need to either own a license, which costs about $600,000, or you need to borrow someone else's license. You need to lease their license from them, and then you become a subsidiary of them. And they could not provide the number. They said it was private, and I was like, no, it isn't. That's a public number you can give out to make sure it's legit. And they couldn't provide it, and then they were freaking out, and they made a mistake when they changed the group. And sorry for the language, but I won't say it actually, but they changed the group name to F'd Group, because they basically knew that group was now poisoned, and they couldn't talk to people in that group anymore. Jesus. And also, I mean, like the other way, they were scammy. They would post images of conferences. This is our conference that we just had in New Zealand. This is our conference we just had in Sydney, with obviously photoshopped images. And then if you do a reverse image search on any of the things they posted, you could find, like one was a car conference from 2017, and then they just photoshopped their logo. Their office building, the photo of their office building, they said they had this big office building and blah, 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 photoshopped. And it was all these photoshopped images, and it was just like, come on, man, like this is too amateur. If you're going to scam people, make a good go of it.
For people that are in the space, that have made transactions, that have already invested, right? I think for them, it's kind of easier to spot scams, especially because kind of what questions to ask. But I can definitely see why people that haven't really been that active in the space can fall for these kind of gimmicks, right? And so, I mean, just something that I noticed from basically these 2 scams that came up in the last week. Something to be cautious about and definitely question is number one, they talked about they talked about Bitcoin mining. They didn't have a website. They didn't have a company that I could research, right? Number two, they direct messaged. So they used basically messaging apps like Telegram, WhatsApp, right? And which is probably, it feels more familiar, and you can get better responses. When someone's pestering you and they send you 20 messages, you kind of almost feel a bit compelled to just send back a message, even if it's to say, stop messaging me, right? And then, And then lastly, I couldn't find any information basically through any kind of other sources. So like, your traditional kind of like journals or, like media sites, couldn't find it listed in any journals or media sites. And so that kind of makes it very hard to know whether these companies are legitimate or not. And the thing is, like, I still haven't 100% told the community member that informed me of, hydro mining in Australia. I didn't tell them that this is 100% a scam, right? Because for me, it's not confirmed. Like, I haven't seen, like, it hasn't been.
Yeah, I mean,
announced.
you can't go defaming businesses without 100% proof. I would say that any business that lies, even about the most basic information, is a scam. I think that people can, and look, I mean, everybody's done it in their life with their resume. People have done it with their accomplishments of their business, or we have this contract when we're really close to it, something like that. Everyone does that. That kind of stuff doesn't bother me. But really basic information about when mining in Australia, when there's no proof that like no one mines in Australia. No one, I mean, other than I know that this is actually a fact. I know that people in Australia, the time that they mine is during winter, because they use the miner as a heater as opposed to a heater. So you'll get you get your rig rolling. Yeah, they roll out the rig, stick it on, it produces a ton of heat, and that's and basically you'll earn Bitcoin or Ethereum or whatever you're mining, and that will offset your electricity bill. So running the heater all day isn't that much of a big deal. Whereas most people doing it at a professional level wouldn't even bother. We also don't have, and I did see the comment about, yes, with Elon's solar batteries. I mean, the main reason why that deal was so tempting for the South Australian government was because it was basically, if we don't provide what we said we're going to provide, we'll give it to you for free. However, every state's electricity is run differently. And I think the biggest issue with the solar stuff in South Australia is consistency. So whereas in other states, there's, I'm not saying it's better. In other states, we use a lot of coal and a lot of natural gas electricity, which is more consistent, but obviously isn't as good for the environment and is more expensive. However, I don't think that electricity is particularly cheaper in South Australia. But I mean, I'm yet to research it, but I do still know that mining electricity is one of the most expensive countries. I think it's at least $6,000 per Bitcoin, whereas somewhere like Venezuela is $500 per Bitcoin. Even Malaysia is only $3,000 per Bitcoin. So it's not that hectic. The other thing I want to mention, though, if people are, I mean, there's three main things that you need to look out for when something comes to a scam. Or there's three things that you can do. Is obviously number one, you've already said, Peter, which is that if the company doesn't have a website, it's probably not legit. If you can't spend 2 hours and $50 to set up a WordPress site or something on Squarespace, I mean, what are you really doing? The reason why a lot of these companies don't set up websites is because you need to link websites back to something, and that allows someone to be traced from, how the website's been done, because obviously the domain needs to be registered to a human being, and if there's no website, there's no human being to chase. So that's one reason why a lot of these companies don't. It's not because of effort, it's because they don't want to be traced, and that's a concern. The other thing is ridiculous returns. Now, you can make reasonable profits trading if you know what you're doing, trading cryptocurrencies. However, consistently, no, you can't be turning, 15% a week or 30% a week or anything like that consistently. I mean, there might be people that do it, but it's few and far between. And most companies that do not chase retail investors to give them $100 or $500 or $1,000. If you're turning over 30% a week, you'll be knocking back people with billion-dollar offers. So if anyone's chasing you for $100 and then making insane returns, I promise you, I can 100% assure you, it is not the opportunity that they're selling to you. You're basically just donating money to someone else if that's the case. The last thing is, if you really want to protect yourself, so number one is website, and then be wary of ridiculously high returns. The other thing you should be really aware of is that anytime they, like I said with the Liberty Sky example, is that if you see a company posting images of, here's an image of our office, here's an image of a conference, do a reverse image search. And I've done it with about 5 or 6 different things that have messaged me. And I can tell you that I think every single time, if you do a Google reverse image search, you can find that image being used, and the image that I've been sent is doctored. So that's the other main thing. There was one last point, but now I forget it. But anyway, but it's a big issue with the industry. But that's actually going to lead me to one last point. And Peter, if you want to just jump in at any point, just yell. But I think that there's one that's just coming out, and Jason and I talked about it today, and it was called, oh damn it, who was it called? I'll get into trouble, but where is it? I'm just trying to remember. My friend sent it to me and asked me. So what happened was a friend contacted me a few days ago and said, oh look, I'm thinking of getting into this Ethereum smart contract system that basically allows you. Now this isn't a scam. Like a usual scam. This is more of a Ponzi scheme. So a Ponzi scheme, I mean, but the thing is that I guess the only positive thing I can say about it is that they are being completely honest about how it works. It's called Forsage, Forsage. It's becoming really big in Southeast Asia at the moment. It's actually one of the main reasons why gas fees are really high. If you actually have a look at gas meter, like the usage of gas in the Ethereum network, one of the main reasons why it's so high is because so many transactions are going through this network.
Wow.
So the way it works is a very, very standard Ponzi pyramid scheme. So what they say to you when someone pitches it to you is, I'm part of this Ethereum smart contract mining thing. I've already got my money back. It's really easy and you can make money out of it. You should get involved. It only costs you $10, say. So what the way that it works is that I might be approached by Peter, and Peter says, oh, you got to get in. I go, okay. Peter's already got his money back. Great. And so then what I do is I then, I put money into the smart contract, and I'm part of Peter's downline, like any other MLM. And then what happens is I then need to get 3 friends to then sign up as well. And then of the $3, one goes to the network. So one goes to Forsage. One goes to, so that friend's $10 goes to Forsage. The second friend's $10 goes to me to pay back my investment. And then the third goes back to Peter. So then of the 3 people that I do, if they do 3 people, then I'll get a cut of 1/3 of whatever they do. And then Peter will get 1/3 of that up to him, blah, blah, blah. So as you can tell, the pyramid just keeps getting bigger and bigger and bigger and wider, but there's no product, there's no service, there's literally nothing. You're not earning money from investment. There's not like there's a black box trading system, which also I don't believe in, but there's no like, we're going to invest this or we're going to mine or whatever. It is literally you convincing your friends to get into a Ponzi, and then them convincing their friends to get into a Ponzi, and then their friends to get their friends into a Ponzi, until basically eventually there won't be any suckers left. And then the bottom of remember a pyramid, the biggest part is the bottom, in this case anyway. All the people at the bottom basically lose. Now, thankfully, the loss isn't massive. It's like $10 or $15 or something. I can't remember now, but it's like $10. So the amount of money isn't huge. So it's not like you're really going to be making people broke. However, a lot of people are getting attracted to it because at the moment it works. You get in, you get 3 friends in underneath you, they get 3 friends underneath them, and then it's this rolling system. Now, because the dollar, I mean, it's brilliant on behalf of Forsage. Brilliant. And it's all done by smart contract. So it means that the organization isn't stealing your money. The money's actually flowing the way it's meant to in the smart contract. And it's actually a very interesting system from a technology point of view. It's like, yeah, it's pretty interesting. However, I mean, there is a moral issue with getting your friends and family and whatever to put something in that isn't really going to do anything for them. And then the only way to really make money out of it is to try to get more people into the net. So it's sort of like, sorry for the current example, considering what everyone's going through, but it's like passing on a disease. You're basically passing on a disease and then asking more people to spread it around to more people. But that's the more interesting one going around. But like I said, no, it's not a scam. It's a Ponzi. But I think the reason why I don't hate them, or I don't think that they're bad or anything. I mean, they're morally questionable considering what they're doing. But I think that at least they're honest about how it works. And it's basically the only people who lose will be the last people in. So, yeah, that's how that works.
I mean, what is the? I'm thinking of the right question to ask here, but I mean, obviously, we do a lot of education here, right? And we try and tell people, like, go tell your friends and family that don't just jump into these investments. Do some research on it. If you don't understand it yourself, go ask someone. Is there a better way? Is there a faster way that these kind of messages can proliferate?
I mean, the issue with, I mean, if you Google it, there's plenty of stuff out there that, they've got their own marketing drones that will go out there and post, oh my God, this is the best money coming in every day or something like that. But then you have a look at most of the information. And it's like, you have a look at any review, any credible source. Most people would be saying this is a scam or this is a Ponzi. Now, I don't think it's a scam because they're being honest about what it is. Like, it's a publicly available it's a publicly available smart contract. So it's like, they're not hiding anything. However, yeah, I mean, it's a morally questionable way to raise money, because obviously the people that are making the most money are the people at the very top. And, of every person, of every third person that signs up, Forsage is making X. So it's, I mean, look, I mean, I might not have it exactly right how it works, by the way. I'm just going to disclose that. I mean, I don't want to have it exactly, but that's the basic gist of how it works. Is it's creating uplines and downlines and things like that.
I think it's still a bit complicated for the average person.
Yes. Okay. So basically, my only thing is that if you're going to get into that, understand that you're getting into a Ponzi, and you're not going to become a millionaire from it. You're not going to turn your $10 into $1 million or anything like that. It's basically getting into a Ponzi. And the one thing we know about every Ponzi in the world is that they always fail. Look, these guys could do it differently, but generally Ponzi's don't work. There's a reason why. So, yeah, I mean, I think that the only thing you need to understand is that there's no such thing as no one will approach an individual, and I'm not trying to insult people in Southeast Asia, but if someone has a really, really good, solid investment thing and they want to sell it and they want to get investors, they're not going to go to people who earn an average salary in a Southeast Asian country to raise investment. Mm-hmm. If your idea is that good, mm-hmm. and you can earn that much money out of it, they're not going to go to me or you, Peter, or something like that. They're going to go to a VC fund or a hedge fund or a bank that has millions of dollars to invest and can really leverage it. They're not going to go to everyday retail people and say, oh, give me $100. That's not going to happen. The other major scam that's happening at the moment is, and this is another Jason story, is where people will ask you for $100 and tell that you within 6 hours you're going to have $5,000. And then 6 hours, you give them $100. 5 hours later, they're like, "Oh, the only way I can give you this $5,000 is if you give me another $1,200. If you don't give me $1,200 in the next hour, I'm going to close your account and you lose everything."
So, Luke, just for the sake of time, I'm going to close it there. But
yeah, sorry.
But anyway, so each week we pretty much do Bitcoin for Beginners or Cryptocurrency for Beginners 101 course. The next one is actually next Thursday. It's called Bitcoin for Beginners, so you can't miss it. Look on our Facebook page and sign yourself up or sign your friends up in case you want them to get educated. And then also there is a course that Jason and Luke are running next Saturday. So it's on, was it July 11? Yeah, July 11. It's a one-day course where they'll basically teach you kind of like the more intermediary stuff. So, intermediate stuff. So basically how to basically level up from just buying your first cryptocurrencies, but actually learning how to do stuff with it and how to earn trades.
I'll just put a comment in there. I'll just make it concise. The not that you weren't doing concise, Peter. I just want to get my 2 cents in. But it is basically a course. It is a course for people who are either at that basic level or completely new. And what it's designed to do is, hopefully, it's not a money making course. We're not gonna say that you're going to be a millionaire, before, during, or after. It's not a course where it's an upsell. There's no other courses afterwards at the moment. It's basically a very, very complete course where we teach people to be safe, and we also get you set up the right way. So the idea about it is that it's going to get you to a level of complete or mostly ignorance to a certain degree of competence, where you can safely operate a wallet. You can safely, you know what a difference between a good, bad, middle exchange is. We set you up with an exchange as well. We set you up with a wallet and give you enough competence that you could quite easily navigate the cryptocurrency space at a starter level without building any bad habits. We also go through a lot more detail into scams and how to avoid them. And the idea is less about trying to make you rich from crypto, but more about ensuring that you just don't lose. So, for example, the cost of the course is excessively cheap, but the idea is if we can prevent you from, getting involved in one hack, in one sham exchange, if we can stop you from getting into one scam or being able to identify the difference between a scam and a legit opportunity, then you've essentially made back 10x on what you would have paid for the course. So the idea is it's meant to get you to a level of competence. And the reason why it's so cheap is because we want people to become competent crypto citizens rather than short-term participants in this place. Like, we're all about adoption, and we're all about building up a competent level of skills in this space, and that's what we're trying to do. And if you're thinking of getting involved in this industry, whether it's from an investment standpoint, whether from a work standpoint, like you're saying, okay, I might be interested in jobs here or whatever, then it's something that probably would be of interest.
Yeah. So, Luke, please drop the link in the comments so that people can find it.
I don't have the link. That's a Jason thing, but I'm sure we can find it. We've got it somewhere.
Drop it in. Okay, but let me move on, because we've been talking about scams for a while now.
Sorry.
It's and there's bigger news out there in the week. So one of them being DeFi again, right? So it's kind of like our hot topic of like the last couple of weeks, and I guess there's just so many angles to it, right? So I think why I'm bringing up Kyber, it's kind of like hot off the press. Yesterday made ridiculous gains, up something like 87% since June 28th. So a week ago, had you invested, you would have almost made 100%. And you invested like at the beginning of the year, would have been 755%. But anyway, other than the gains, like, why is it so hot, right? So when we look at Kyber, right, it's so another liquidity pool. So it's a decentralized liquidity pool protocol holding, basically what it does is it holds different types of ERC20 tokens in smart contracts that are ready to be traded at any time, right? And it's all automated through their smart contracts, right? And why did it get so much hype in the last week is because it's basically got a launch called Catalyst coming out on July 7th, which actually will be together with Kyber DAO. So that's another thing that's pretty hot right now in the DeFi space, is talking of DAOs. And definitely I'm going to ask you, Luke, to share some opinions on that. But like, basically Catalyst, the most important thing I think to take from this is that finally, out of these DeFi protocols where you can stake, and I correct me if I'm wrong, but for staking Kyber, you can actually get ETH rewards, and I think that's quite interesting, seeing as a lot of people feel that ETH is very undervalued right now, and so they would like to be able to hold one token, but then earn back ETH at the same time, right, as rewards. And I feel that's quite interesting. What do you think, Luke?
Yeah, I mean, I think that it is good. I mean, a lot of these networks now are doing this kind of stuff where they're getting involved in staking, so that if you own the token, you can actually get something out of it. So that's obviously going to push up the price of a lot of tokens, because people need to acquire them because they want to get a return, especially in today's environment where bank rates are at 0. Or sometimes only slightly above. It's a way to get earnings without really having to do anything. And I'd probably say that's a common trap that a lot of crypto investors fall into, wanting to earn money without doing anything. But I think we're going to see a lot more of this. I think you're going to see a lot more exchanges allowing people to deposit their crypto with the view that you'll be able to earn some kind of you'll be able to earn from doing that. Now that gives the exchange access to better liquidity to then, for their trading, which gives them more fees. And then it also allows the users to then benefit from that. So, and we're seeing that with a lot of the DeFi products that are out at the moment. We'll see that, once there are more DeFi products, because we will need, once insurance becomes a thing, there'll be a certain degree of people being able to collateralize assets to then benefit from that as well. Obviously, because as an insurance company, you need to have some kind of backing to then offer the insurance that you're giving out from an actuarial level. So I think that we'll see a lot more of this, and I think that it's a good thing, because now we're seeing part of it is the banking the unbanked argument, but I think that a lot of it is to do with being able to take out a lot of the bureaucratic burden that faces a lot of large financial institutions. So, for example, if you have a look at something like Compound or DMC or DMM, or DMZ is the token, or what's happening, Plutus. There's a number of different of these, or FLend or Aave. A lot of these tokens that are sort of out there doing this lending, like the DeFi lending. Essentially, a lot of them are now becoming DAOs, and that's sort of mean because and then the owners of the token then have voting rights on as to the direction of the company, meaning that you've essentially you don't need someone managing the interest rates between products. You don't need analysts to sit there and say, oh, what should we do with our interest rates on these different classes of assets? You don't need actuaries running numbers to work out how to affect the flow of money throughout a business. It's all being done by, code and smart contracts, and it's all completely automated. And then you even remove the executive level of a business by allowing the participants or the users in a network to vote on the way that the network should evolve over time. So as conditions change, obviously something like Bitcoin cannot change. Bitcoin's stuck how it is forever, because there's no way you're going to get a consensus fork on Bitcoin. So it means that you end up with something that you end up with an organization that is perpetual, because it's not relying on one group of managers or directors or whatever. The users themselves are making the decisions on the directions of the organization, which can be good and bad depending on how you look at it. However, a lot of that restrictive backend that a lot of large businesses have is completely removed from the start. So if you have a look at the size of a lot of banks, like in Australia, Commonwealth Bank employs, I think it's 80 or 60,000 people. And what does a bank do? It takes in depositor funds, it then fractionalizes those, and then sends out the loans on the other side at a really base level. And essentially, a lot of these organizations are creating a similar product, but with absolutely no human beings being involved in the process, all completely automated. So the value that gives to the market is you end up with more competitive rates, more competitive products, and you sort of lose a lot of that. Not to get my tinfoil hat on, but you lose a lot of that corporate manipulation of governments, because a DAO cannot bribe somebody. They just do their thing. They do the service to which they've been designed for, and they do not participate in people's personal lives outside of their customers, outside of the customers they're trying to hit, and that's a good thing. So I think it's an interesting way that we'll see things move forward, and I think that it also gives people who hold these tokens a reason to hold them, as in to sit there, hodl them, stake them, earn some money, earn the potential capital upside, and then have a far better outcome than what we've seen in the market for the past 2 years.
Yeah, I know. Agree. I tend to be more on the pessimistic side, I guess, right now for the DAO structures, because I've just heard so many. It's still
I will caveat. I agree with you, Peter. I will 100% agree with you on that. I will caveat what I've said to say that we're still in the experimental stage.
Yeah.
All this stuff, even things like Compound, or a lot of the lending products that are actually becoming reasonably popular, they are still all experiments. We don't know how it's all going to work out when we need the world to catch up to the technology.
Yeah, I think it was just like you said last week. Do you remember when we looked at Compound, and I think the majority of votes were held by the VCs, right? So it doesn't even matter.
That's going to be the case for the next 18 months,
right?
There's not going to be enough tokens to hit the market that are going to make even the slightest. I mean, it's about 1 million tokens a year.
Yeah. So that's it. And then like, so when people talk about DAOs, you've got to really look carefully at like whether really you will be making any impact with your votes, right? Because otherwise,
at the moment you're not. But the VCs have. I mean, the VCs will want to liquidate their positions eventually. I mean, they'll want to get their money out. I mean, I don't think like no VC's business model is we want to have a voting interest in a lending platform. The VCs would be voting in order for proposals that will see the growth of the platform to such a degree that the value of the token will rise. And then once their lockouts are done, like their token lockouts are released, because they'll be locked down for the next 12 months. Once they can actually start to sell their tokens, they'll then start to liquidate. No VC is interested in holding voting stake in something like this. So I think that the vast majority of VCs will start to liquidate down, and you won't end up with these massive holders. The only guys that'll still probably be massive are the founders, because it's their baby, and they might even start to liquidate, because the whole idea is that you want it out in the public, you want people voting, and you want less large single holders, and you want more distributed holders all voting on what they think is right. So I think that'll change. We've got 4 years to see how this experiment's going to roll out. I don't think in 4 years you're going to see, other than people that are really keen on it and they want to buy that many tokens, I don't think you're going to see that many people with over 100,000 tokens.
And then one last one for you, Luke. So the last 2 weeks have basically been like, it's been like a staggered kind of release of like DeFi tokens, kind of like going parabolic, right? So do you think this trend is going to continue for the coming weeks?
I think that we are yet to see public investment. I think what you're seeing now is one coin pumping into another coin, pumping into another coin, pumping into another coin. That's what you're seeing. You're seeing everyone pumping into Compound. And I mean, if you want to pull up a chart of Compound, you can see it had this massive run up and then a gigantic run back down again, down to $165. Don't get me wrong. If you got it on day dot, you're still up $100 a token. It's listed at 60. It's now at 160. However, you've then seen coins like, DMM. Oh, what's the bloody token name? I've got it here somewhere. I've been looking at it all day. DMG is the token name, but DMM. Tokens like that are going to start to, that went from 45 cents to $1.80 in 3 days. Then you've got other tokens listing, and there's just massive amount of interest in these things. But I think that what it is, I think a large portion of it is people that have bought in on comp, then they've ridden that up, sold, and then they've, in some cases, close to 10x'd. You've 10x'd on comp. What do you put 10 grand into comp, now you get 100 grand. What are you going to do with that 100 grand? You might take some off the table, but then you still got 50 grand to play with. And then you'll pump that into another project, and then you'll pump that into another project. And so I think that there will be this. I think you'll just be seeing these projects get pumped. If you're lucky enough to get involved in one, the only advice I would give you is to say that this market is pump and dump is something, I'm sure it existed well before cryptocurrency. However, I've never seen it so used in any other market in my life than in cryptocurrency. So pumping and dumping is what this market does, and it will do it forever. Maybe not forever, but for the near term. And just be aware that anything that goes up rapidly will fall just as fast. There's a saying we used to have when trading. It was up the stairs, down the elevator. And so that's generally what markets do. Up the stairs, down the elevator. And if you have a look at comp, it's up the stairs and then bam, straight back down again. So, and just remember that this is consistent. So you're never going to get a coin that goes on a really big run where it gives people 10x and they don't sell out. No one, and this is why I often say there's very few people who own Bitcoin in 2012 that are still holding the same Bitcoin in 2020. In 2020. Most people that bought in 2012 or mined in 2012 or 2009, whatever, either lost their coins, and there's a lot of proof that that's the case because there's like 4 million lost Bitcoins. They either lost the coins or they sold them. When it hit $100 or something. And then a lot of people that bought at $100 or $200 sold it at whatever. The people that are, I don't know. I mean, I'm fairly certain this is the case, that a lot of the people that are Bitcoin millionaires are the vast minority of people who've owned Bitcoin. Because they have an unusual amount of luck in that they mined a bunch of Bitcoin, was like, oh, that's a cool experiment. I've got 10,000 Bitcoin that I mined over a three-month period.
Mm-hmm.
All right, I'll just forget about that and store the keys on a USB that I haven't lost. Then they've located and been like, holy, I've done pretty well. Or you're an absolute, you have balls of steel. And the unfortunate thing about the market is that the vast majority of human beings, 99.9% of us, don't have balls like that. No one's going to buy something for $1 and then watch it go to $1,000 and not liquidate. Like there is it's gone from $1 to $1,000. Surely it's going to go to $10,000. Like no one. There are very few people who think like that. And if you were around in Bitcoin around that period, like there's no way people were just going like, wow, this is nuts. Get out. No one was like, oh, we're going to take over the world. It's going to $1 million or something like that.
I think that's the next masterclass. You need
Sorry?
to start. Hodl mentality.
Yeah, no, I'm not. I think we talked about this. I don't get involved in. I mean, and this is fairly consistent. This obviously is, I guess, it's not a plug for the course we're doing, but I don't generally teach people how to trade because 99% of people shouldn't trade. That's the God honest truth, and it's mostly a psychology thing. I'm not saying that, and I don't trade all the time either. I go through periods of trading and then I stop and I don't touch the markets for 6 months and then I'll go back again and have another go at it. It's not something that, I mean, there is a statistic that 96% of traders fail in their first year, and then those that succeed the following year, 99% of them fail in their second year.
Jesus.
So it's like that's consistent across decades of data. Like it's not a short thing. If anyone says I'm a really successful Forex trader, most of them are selling courses on how to teach Forex. They're not trading Forex. That's generally the things I've seen in the market. There are good traders out there, but not many of them teach. And there's a reason why. You need to be a certain type of person to be a trader. I can sometimes be that person, but most of the time I can't. I'm not that. I can't concentrate for that long, unfortunately. So it's one of those things that it's a skill and it takes time to learn. And like most skills, most people don't have the patience to learn it to its mastery level. So if you're not going to do it, don't. If you're not going to give it everything, don't do it. And I don't think people have. I don't think 99% of people have the. And this is. I spent the first 4 years of my career teaching people how to trade, so I think I can say that with a little bit of authority. But I think that 99% of people just have no business trading. However, investing is no problem. But the only thing I would say to people is, if you are going to get involved in this market, and I think there's a lot of good reasons to get involved now, especially because there's a lot of exciting things coming up, is number one, understand how much you're willing to lose of your capital. If it's everything, that's fine, but just don't do it all in one go. Have a think about, number one is have a think about what level you're going to sell any or all of the coin that you buy. So if you buy something at $1 and you're like, I'll be happy if I buy this. Yeah, I buy $1,000 worth of something at $1. Okay, and you're like, oh, if it gets to $2, I'm out. I've doubled my money. I'm happy. Then do it. Write it down. Do it. Don't get to 210 and go, oh, maybe this will go a bit higher. Say I made 5% more than I said I would. I'm gonna get out now. Don't get greedy. And most of you will probably see it. Is that when you're in that position, the greed kicks in and you won't sell. And then you'll watch it go to $2.50 and you're like, this thing's going to 10. Then you watch it go down back to 2 and you're like, oh, I'll just hold on a little while longer. And then it's $1.80 and I'll get back out when it's back at 2, $1.50, 50 cents. Oh, I'm out. And then you've gone from being 200, you've gone from being 2.5 times your money down to a 50% loss. And I can tell you now, that is the worst feeling in the world. That is, I would much rather buy for $1, watch it drop to 50 cents in 10 seconds and sell, than go through up and down again. I would. It's terrible, and it is a far worse feeling than selling at $2, watching go to 50 cents, and going, oh well, I missed out on that last little bit. Oh well, shit happens, and moving on.
It was $3.
So, yeah, but I will be honest with you. Most people, and I know a lot, even in my I'm in a professional group, a group full of professionals in Telegram. About 100 guys who are all very, very good at crypto. I watch guys in that group who bought comp in the private sale, so they got in at comp at $30, and most of them sold out at $300. So a lot of them made good money.
Wow.
And one guy was like, "Nah, this is going to $500." And
Oops.
I mean, I was saying in the group, I was like, no one, obviously nothing learned from 2017. No lessons learned in the past 2 years. And then, sure enough, still holding, and it's down to 160. It's like you could have, even if you sold out, you could have bought back in.
I saw a meme this week actually. That's when traders become investors.
Yeah,
that was the meme.
We used to say when we were teaching people, it's never turn a short-term trade into a long-term investment.
Right.
Because the reason why you got in was for a short-term profit, and then the reason you stay in isn't because you believe in the project. It's because you are in too much emotional pain to realize you are wrong.
Yeah. On that note, we're coming up to the hour, Luke.
Wow, Jesus, an hour. Sorry, I'm talking too much.
So let's do the round of socials. Thank you to those who actually tuned in and stayed with us for the whole hour. If you guys are not subscribed yet, make sure you subscribe to our YouTube channel. So that's on BlockchainSpace. Luke's YouTube channel, which is Blocksiders. Go find us on Facebook as well. So you find Luke on Fortifex and you find me on BlockchainSpace. All right. Thanks, Luke.
Excellent. And we posted, I guess, Peter, this is for you, but everyone can hear it, but it's all right. I posted the link to you in your WhatsApp for the Bitcoin Fast Pass. And,
we put it.
Yeah, and just put, I guess if you want to put a link to my channel in the chat, we'll just put those down below. But yeah, I think that's about it. I hope I didn't bore anybody again.
Never. Thanks, Luke.
All right. See you guys.